Good morning, everybody. It is Thursday, April 4th, 2024. We are here back again on the market open. And ladies and gentlemen, we just got this morning as I was driving back from Dunkin' Donuts and I checked my phone and I saw Palantir was up 3%. And I knew just for a second that something had happened. I went to Palantir's news. I couldn't find the news. As I was Googling, I literally stopped on the side of the road because I needed to know what was happening. We got a pump. We got a good old-fashioned pump. We got a pumpy pump. We got a pump of pumps on a day or on a week where Palantir, I don't want to say got demolished, but basically just got rejected by the 23 level so hard over the past 4 days, and we got as low as 2180. We got a pump of epic proportions where Palantir is up 5% in the pre-markets. And I think we're going to keep the pump because the macro data we got today this morning with a jobs report, which we'll talk about that, and the macro data we got yesterday, and Jay Powell sounding a little bit more dovish yesterday at his Stanford keynote, which we'll talk about as well. All of that plays very well into the news we got today to have a good old-fashioned pump. Palantir, $23.74 in the pre-market. We're going to talk about why that happened. I actually had another Palantir deal to talk about. I don't know if people saw, they got a new government deal last night. It wasn't like a big like commercial deal. There wasn't a lot of money attached to it, but I did want to cover it because I thought it was important. But this morning, as you can see, Palantir 2380, we got a deal with Oracle. And we're going to talk about that deal, why it's so important. I didn't expect the street to pump this thing 5%, dude. But the street's like, holy crap, this is a good deal. And so the street's excited, which is really good. And quite frankly, I had some put credit spreads on Palantir, which is a bullish strategy. It's not a bearish strategy. Like in a nutshell, my thesis was that Palantir by April 5th, which is tomorrow, would be $23 and above. And the sucker was below $23 for the past 5 days. Like I wrote this 2 weeks ago and I was like, Palantir's not falling below $23 by April 5th. We're going to be okay. And then lo and behold, we're at fucking 2180 yesterday. I'm like, oh boy, first time I do this strategy and it goes wrong. It's a little bit of money, right? Just playing with it, trying to understand it. It's a different option strategy, just trying to like get a feel for it. Sometimes you got to put your own money in there to really understand what you're doing. And I was like, all right, I guess I'm going to lose a little bit of money because Palantir is below 23. They came in with the Oracle pump, and maybe we get to keep some of that money if we stay above 23 by tomorrow. So not bad, and we'll discuss everything that's going on. Thank you, everybody, for being here. Let's get into the market open. Afton, Sundown Sand, Midwest Trucker Rob, Golden Eagle, Super Ranald, Brent, Top Dancer, On Beneficial, Kim, Eeyore was right, Duncan, iBot, Inbound, Golden Eagle, Tesla, Quarantine Quartet, Baskar Cows, Ty Gordon, Sanjay. Good morning, everybody. Thank you for being here. Delu, Digital Content, Hiran Patel, Mitch, Douglas. Thank you, everybody, again for being here. Let's get into the market open. Okay, before we get into this, just quick acknowledgement, because I know everyone's probably wondering about it. Yes, we did do the Vlad interview yesterday with Robinhood, CEO and founder of Robinhood. I posted it, and the reception was pretty awesome, man. The reception was pretty awesome. A lot of you guys seem to have enjoyed the interview. I am my biggest critic, and I watched the interview at least 5 times, and I walked away thinking, okay, I don't think that was that bad of an interview. I think it was actually good. Questions were good. We kept the flow good. And this last night was kind of the cherry on top. Vlad quote tweeted it on Twitter, and he said, from one fan to another, thank you for having me. At the beginning of the podcast, if you guys watched it, I said, well, I've been a fan of Robinhood for years. And he said, thank you for having me. I've been a fan of your content for the past couple months. And I was just like, this is my face right there. I was just like, I can't even believe you're saying that right now. Right. So it was pretty crazy. It was awesome stuff. We'll talk more about it later, but thank you for all the positive feedback on that. And look, now we got to keep working. You guys know my mentality on this. This is a very competitive game. Media is ruthless. You're in one day, out the other. And so it's a stepping stone to keep moving, but it's one of those days you reflect and you're like, this was good. This was awesome. This was pretty damn cool. And it introduced you to some new audiences. Some new people know who you are, but now what's the next step forward? And the next step forward is to use this to really build out and keep going. And so that's the mentality, and we'll keep going from there. So thank you, everybody, for the love and the appreciation. I'm glad you guys enjoyed it. I'm really glad you guys enjoyed the interview. Okay, Palantir, here we go. Oracle and Palantir join forces to deliver mission-critical AI solutions to the government and business. I haven't read this whole thing. I read bits and pieces of it. So let's read it together, and we'll analyze it together and understand why the hell the street has us at 2380 right now, and why they're so excited about this. By the way, This was not on Palantir's website. Oracle put this out. It's not on Palantir. Maybe Palantir's going to put it out later, but so far, Oracle is the only company that put it out. And so it's kind of interesting that John said this on Twitter, that maybe Oracle, well, we definitely know Oracle is proud to put this out. But it's just interesting to say that Oracle wanted to put it out before Palantir and get the world to know that, hey, they're working with Palantir, so they're proud of this partnership as well. All right, Oracle and Palantir today announced a partnership to provide secure cloud and AI solutions aiming to power businesses and governments around the world. Oracle's distributed cloud and AI infrastructure, combined with Palantir's leading AI and decision acceleration platforms, will help organizations maximize the value of their data, which will contribute to increasing efficiency, addressing sovereignty requirements. That's interesting. That's government stuff. And helping them outpace adversaries. Okay. As a part of the agreement, Palantir will move Foundry workloads to Oracle Cloud infrastructure. Now, I don't think that takes away the AWS deal that Palantir has. Most of us are speculating it's AWS because it's likely them or Azure. They're probably still working with all three of the hyperscalers, but I think this is in addition to them working with the other guys. Palantir will also make its Gotham and AI platforms deployable across Oracle's distributed cloud. Oracle's vast cloud footprint and sovereign AI capabilities will allow more organizations to use Palantir's leading platforms for data integration and decision-making. Oracle and Palantir are proving there is no trade-off. Organizations can have the best cloud infrastructure, cloud applications, and AI while meeting the highest sovereignty and security standards. Vice President of Oracle. Oracle is the only hyperscaler capable of delivering its entire AI and cloud suite to any business or government around the world. Interesting. By combining the performance, scalability, and flexibility of Oracle Cloud infrastructure with Palantir's leading data and AI platforms, we will help our customers win in any industry or in environment. Okay, so far from reading this, the reason the stock is up 4% is because I think the street basically believes that Oracle's distribution, Oracle has tens of thousands of clients, are going to have access to Palantir Foundry AI workloads. And as a result of that, there will likely be a little bit more integration and a bit more easier forms of distribution for Palantir to potentially access those customers that would not have the possibility to download something like Palantir and to build on top of it. So maybe that's kind of the reason the market is excited about this. Josh Harris, Executive VP of Palantir, says Palantir and Oracle are both dedicated to defending Western interests and institutions around the world. Oracle Cloud infrastructure, unique ability to help customers meet their regulatory performance and security needs will increase our impact and help our global clients gain the full benefits of cloud and AI. All right, so there you go. What I'm getting from this, the fact that they actually said Western values and interests, I think that's another big part of this deal. Oracle seems to be a cloud-based infrastructure that actually cares about some of the core concept around sovereignty, right? Which is incredibly important in the context of Palantir. They do not want to be deploying their AI to China and have China running malign AI platforms on top of Palantir's workloads. They've refused to do business with China and Russia for a long time, and they lost money from investors historically for refusing to do that, but they've kept up their values. If Oracle comes to them and says, hey, we have the same values, we understand exactly what you're going through from a regulatory and a technical perspective and a mission-based perspective with the Western value stuff, maybe this partnership makes a lot of sense. Maybe the distribution of this helps you guys get clients, helps us ultimately give clients access to something like Palantir. Remember, Palantir is not just trying to use cloud infrastructure from the hyperscalers. The hyperscalers aren't getting any benefit if people aren't using their platforms to build on top of. So for example, it's like the App Store. The App Store in iOS means nothing unless there is a Facebook, unless there's an Instagram, unless there is Uber Eats, right? You need to download applications off that App Store for the App Store to provide any value. With the hyperscalers and cloud infrastructure, a client's paying for cloud if they're running computational platforms on top of that cloud, so they pay for compute. Now, Oracle's a little bit more, nuanced than just paying for compute like AWS or GCP or Azure. But the point is they can offer workloads of Foundry and instances of those workloads of Foundry and AIP on top of their cloud, and they're distributed they're running that from a distributed basis. That should mean more revenue for Oracle in the long term and more revenue for Palantir, and overall a good partnership for both companies in the long term as they get more and more people onto each of their platforms. So that's a big deal. As Defin says in the chat, Oracle is not small. So let's look at Oracle's market cap. This is very interesting too, because I think Oracle and Palantir, Oracle, for those that don't remember, Oracle tried to buy Palantir a long time ago. Oracle right now, their market cap, $350 billion. Yeah, they're up 1% in the pre-market. Oracle tried to buy Palantir back in 2017. Yeah, so right here, this is the Fortune magazine article. If people don't remember, I think $35 billion was the offer they gave, which was a hell of a valuation back in 2017. But obviously Palantir rejected that. So Oracle tried to buy Palantir back in 2017. Someone met with Peter Thiel and they tried to get it done. Oracle paid $9.5 billion to buy NetSuite. Yeah, look, it was valued at about $20 billion back then, and they were thinking of buying it close to around $30 billion. So these guys have been in, and I'll put the article in the chat for anyone who wants to see that. These guys have been in conversation for a very long time. And the fact that they're doing this partnership right now makes a lot of sense to me. And I mean, it's a good thing for the overall ecosystem for Palantir to develop. So now at this point, Palantir is working with AWS, with Azure, with GCP. They announced a bunch of partnerships last year with Amazon's AWS Marketplace for Manufacturing, which is a subsidiary of the overall AWS Marketplace. And now they're partnering with Oracle. I don't think this is something the street's going to ignore, because essentially what Palantir is saying to the street with this deal is, hey, our software is becoming so popular. We're getting so many customers. So many people want to use our shit over other people's shit that if we are not on every hyperscaler, we are losing business. And so what that is telling the street, in my opinion, is, okay, so you guys are partnering with all these big hyperscalers because you have so much demand from customers that might not use AWS, that might be using Oracle exclusively. And so if you're not on Oracle, they're not going to use you, but they want to use you. So you're adjusting and you're coming to Oracle. On top of that, Oracle has a ton of government deals as well. So I think when the press release talked about sovereignty and Western values and how they can deliver mission critical AI solutions to governments and businesses, another key component to this is the government business. Now, last thing I'll say on this is that we've seen a slight reacceleration of the government business by Palantir as for getting the Titan contract, for getting a $10 million electromagnetic contract, and for getting a deal that they got yesterday. I'll talk more about this in Daily Palantir, but they got a deal yesterday. They tweeted this out, and I haven't even got a chance to really read through this deal, but this is what it is in a nutshell. And to me, if they're getting more government deals and that government business is reaccelerating, you might as well partner with one of the largest hyperscalers in the government, the U.S. government, which is Oracle. So this is what they tweeted yesterday. The U.S. Army and the Defense Innovation Unit have selected Palantir to participate as a software system integrator on the Ground Vehicle Autonomous Pathways project, prototyping the integration of disparate hardware and software tech for the Robotic Combat Vehicle program. I haven't read the article. I don't know what any of that means. What I do know is that Palantir is taking over the fucking US government and we're going to be fucking rich one day, because these guys are getting a lot of government deals. And over the next decade, I think it's going to be very hard for other companies to be able to get some of the government deals that they're getting. I think this is a big, big, big stepping stone for Palantir partnering with Oracle, because that just means more government contracts are coming at the end of the day. I mean, like the Ground Vehicle Autonomous Pathways project, like, I didn't even know that was a thing. I didn't even know Titan was a thing. Most of us like knew the Titan deal. We didn't actually know what the Titan prototype was. The fact that Palantir is getting selected, by the way, Titan 2 years ago, they got a prototype. What did they get in this Ground Vehicle Autonomous Pathways project? A prototype to integrate disparate hardware and software. Palantir says, hey, well, give us 6 months to a year. We'll build you a prototype. You'll like it better than everybody else. You'll like it better than a Raytheon, which they beat for the Titan contract. And then you'll give us a ton of money. And that's how it works for Palantir. And so very, very, very exciting stuff in the government business. Michael Schaefer says, yes, Palantir is taking over the military. I think if you're invested in Palantir, the one thing you can sort of understand or count on is that the government needs Palantir. How much of those government contracts will Palantir capture? That's a question of execution. But the government is definitely looking to them as a source. And over time, if they can continue to look at them as a source, that will be very valuable for Palantir. So super exciting stuff. Super, super, super exciting stuff on this new partnership we got today for Palantir. Shintoki says, didn't Oracle want to buy Palantir? Yep, Oracle did want to buy Palantir back in 2017. Is Palantir up because of this news? Correct. Palantir is up because of this news. Again, I was driving from Dunkin' Donuts. I took one look at the phone and I saw Palantir was up 3%. I was like, what did they announce? Because I was like, the street's not just going to get, because it was the only stock I had that was like really like, candlestick. It was up it was green and it was up. And I was like, okay, so what happened? I couldn't find anything on their website. And then I saw that Oracle partnered with them. And that is a very, very big deal. And the street's excited about that. The other reason it's really good that the street's reacting to this is because the street's not thinking of this as like, oh, it's just like like a, like one of those business development partnerships. Companies do this all the time, right? Like Shopify and Spotify teamed up for like a 3-month free trial or something. Like, yeah, that's going to bring more users and technically that should bring more revenue, but the street doesn't really care about that stuff, right? Now, the reason Spotify is up is because they increased their prices for their subscription yesterday, but the street cares more about real hardcore partnerships that they can tangibly put into their valuation models to be like, oh, if this works out, and you give the benefit of the doubt because both organizations are very competent organizations, Oracle and Palantir are working together, this should result in business value, and that ultimately comes down to shareholder value. So the stock goes up, and we'll see if it comes back down to the $22 levels. But if you got 22, you got 21.80, you got a good dip. All right, so that's the news on Palantir. If you are just joining, we are up 5% on the day, 4.76% because we have partnered with Oracle. This was a partnership that was supposed to happen, I think, for a while, and it seems like this was the right time for it to happen. And that's why the market has it up about 4.76%. Let's transition to the macro. We got a lot of data yesterday and this morning that is indicating that the macro is continuing to believe that this market wants to rally and this market wants to keep going, even if for the first 2 days of Q2, the market was a little upset about inflation. Let's listen to Tom Lee yesterday on CNBC and get his thoughts on some of the data we got yesterday.
Talk about it with another guy who's pretty successful in his own right. That is Tom Lee. He's the managing partner and head of research at Fundstrat. If you had to go on Team Cohen, which I guess is the Mets, and Team Einhorn, like I'll call that the Brewers because he's from Milwaukee, which team would you be on, Tom Lee?
Well, I hope I don't get judged, but I'd be on the Team Mets and Cohen.
Why is that? Lay it out.
The reason he's saying that is because Steve Cohen, the hedge fund manager that manages $31 billion of capital for 0.72, he said yesterday on CNBC, AI is not a bubble, earnings are real, and like this broadening of the rally, it makes sense because companies are putting up the numbers. That's why Tom is saying that he's on Team Mets because Steve Cohen owns the Mets.
Out.
Well, I think that the reason the idea of cuts was being rolled back was the January and February inflation reports globally showed inflation was accelerating. And part of that is a statistical aberration. There's just some really poor seasonal adjustments that take place. The March CPI reports coming out of Europe have shown a big collapse from those January, February levels. Like Eurozone, it's back to 2.4%. The March CPI for the US is coming out next week, which is April 10th. And by the time the Fed meets in June, there's going to be a total of 3 inflation reports, March, April, May. I think by then, markets are going to be a lot more confident that inflation is falling, and the 3 cuts actually may be too low. There's a possibility there's more than 3 cuts this year.
Okay. Wow. I tweeted out a poll yesterday.
So for everyone who's been feeling, including myself, that we might get 1 cut if we're lucky, Tom's like, no. The data we're getting is actually good enough to suggest maybe we get more than 3. And he's not alone. The entire market felt that way yesterday. We'll talk about what data came out to kind of really get the market to feel that way. But that's how he's thinking that inflation might turn out for the end of the year.
And I think we might get less or maybe none, but that's why you do what you do. And I sit here on this side of the camera, Tom. If we get 1 cut, if we get 2 cuts, if we get 3 cuts, if we get 4 cuts, does that change your end of year S&P target? I mean, does another 0.5 percentage point off the Fed funds rate matter to the S&P 500 in the short term?
Brian, I think the number of cuts won't matter as much as the reason the Fed is titrating its cuts. If the Fed is titrating its cuts because the economy is showing resilience, so it's strong, but not necessarily inflationary, I think the market would take that as quite dovish because it's really a Fed trying to manage the business cycle. If the Fed is cutting back its number of cuts because inflation is reaccelerating, that would actually be incrementally bearish. So I think that the rationale actually is more important than the number of cuts.
Okay, well said. Tom, I want to switch gears a bit. The Federal Reserve, we've been focused on inflation for 3 years, but the Federal Reserve's dual mandate also looks at job growth. And a new article today in the Wall Street Journal highlights a rather curious trend in the difference between the 2 ways that the federal government measures employment. And if you read between the lines in the journal's article, it implies that much of our recent job growth, maybe a majority of it, is due to immigration. Much of that, of course, would be undocumented immigration and those seeking asylum. In fact, the CBO, Tom, just raised population growth estimates to account for the millions who have crossed the border in the last few years. Leaving out all political arguments about the border, we're talking about the markets here. Do we care? And Morgan Stanley alluded to the same issue kind of yesterday. Do we care where the job growth really comes from when we're looking at markets and the Fed?
Brian, it's objectively, it's actually a good thing because we know the Phillips curve's kind of been busted. That's supposed to measure unemployment rates and wage inflation, and we've had unemployment sort of pinned at these levels and wage inflation isn't accelerating. So it shows that we're adding jobs, we're adding to the worker supply and actually adding to aggregate demand without creating inflation. And on balance, that's quite positive. And does it matter where this labor supply is being filled? It's a great question, but as you know, I mean, the U.S. is essentially a nation of immigrants anyway. So I don't think necessarily immigrant labor driving, wage growth and demand growth and filling jobs is a bad thing.
So speaking of jobs, we got new job data this morning, which is what Tom Lee was kind of speaking about in regards to how the jobs are playing out. Amazon 52-week high. Yeah, that's a big one right now. Amazon's been getting ready to break that level for a while. So initial jobless claims, this came out this morning, 221,000 versus 213,000, which means that 9,000 more people, 221 minus 213, that's the right math, right? No, 8,000. Right? No, fuck, 8,000. I did the wrong math. 8,000 people were more unemployed, were filed for unemployment more than was expected. Previously was 210,000. Continuing jobless claims, 1.79 million versus 1.81 million were expected. Previous was 1.819. So what does that mean? That means that unemployment is taking up a little bit on the initial jobless claim perspective, but overall continuing jobless claims are starting to go down, which is bullish and bearish. So why is this bullish? Well, it's bullish because if we have more people filing for unemployment, we have less inflation theoretically. But again, this is only 8,000 people, right? So I don't know if it's that substantial of an impact. And so that's why it's bullish. The bearish perspective is that the overall unemployment initial jobless claims went down. You might want that to go up in order for unemployment to increase. Now, the weird thing about unemployment, private ADP payrolls came out yesterday at 187,000. We have 3.9% unemployment, but a lot of those jobs are potentially cyclical, and a lot of those jobs are not necessarily jobs that are going to last for a long time. And a lot of them, the Fed just counted them wrong, right? The Fed has been revising their estimates for this for a long time. So in that context, the 3.9% unemployment, more likely people are estimating is closer to 4.1, but the Fed doesn't feel like that's happening yet. If it is closer to 4.1, the only way the Fed gets away with cutting interest rates, because I don't think it can get to 4.1, it has to get to 4.3, 4.5 for the Fed to be like, oh, the economy is breaking, people are losing their jobs, we need to cut interest rates to re-stimulate the economy. Right now, the Fed is in a Goldilocks zone where unemployment, it's reported at 3.9. Let's say it's at 4.1. Let's say it's at 4.2, just because that's the real number. That is not enough to trigger the Fed cutting rates to stimulate the economy. Obviously, the economy has been doing really well. Palantir passing $24 right now. Some big orders coming in, up 5.5%. So the Fed is in a Goldilocks zone, which is what Tom Lee's talking about. He can see, Jay Powell can see inflation come down over time without jobs, the unemployment rate massively going up, right? If unemployment was at 5-6% and inflation was still sticky, we would be kind of screwed as an economy. Because then what's Jay Powell supposed to do? Is he supposed to lower rates and make sure we can stimulate the economy and then risk inflation reaccelerating? Or is he supposed to let people be unemployed? At that point, that would be millions of people be unemployed, or at least high 6 digits, and try to let inflation to come down naturally. Jay Powell is getting one of the best circumstances I think he could have asked for, which is unemployment is low. Even if it's higher than what the street is reporting, what the Fed is reporting, it's still relatively low. People have the ability to get jobs. If you apply for a job, it's a competitive market. You can apply for jobs. Wages are decent. And inflation is slowly coming down. Why is inflation slowly coming down? Well, why did the market reverse yesterday? There was one piece of data, ISM services. ISM services is how much, the PMI report for ISM services, how much people are paying for services. The market was expecting 58. It came in at 53. And so when you have above 50, you're expanding. Below 50, you're contracting. We are an expanding economy above 50. But if you're way too above 50, you have the risk of inflation. We came in 5 points below on that index from 58 to 53. So even if you don't know what that index is, all you need to know is that the expectation came in dramatically lower than what the market thought it would be, which is why the market was like, wait a second, inflation's coming down. And if inflation's coming down, rate cuts are on the table. If rate cuts are on the table, the market can still go higher. If the market can still go higher, people are going to buy stocks. And so that's what we have right now. That's why this macro is easing up a little bit. It's really funny to me that in the past 2 days, right, like April 1st, April 2nd, everyone, including myself, are just like, all right, I guess we're ready for a little bit of a pullback. Q1 was too good. People got to take their profits. Inflation sticky. I said on this channel a couple of days ago, I thought this inflation being sticky thing is bullshit because people are just looking for an excuse at this point. Nothing that happened on April 1st or April 2nd was different. We got no data. The Fed didn't speak, literally nothing than what all, the indicators we got in March. So in 2 days for the market to tank, and it didn't really tank, but you know what I mean? It seemed like people were looking for an excuse to sell. And day by day, you're getting more excuses to not sell because things are actually going all right. And so we'll see. We'll see how it plays up. But right now, macro is clearing up a little bit more. Walter White says, why is Palantir mooning? Well, Walter White, the reason Palantir is mooning is because they have a fucking meth lab, Mr. Walter White, of data, of cloud, and of AI infrastructure. And they're bringing in Oracle into that meth lab, Mr. Walter White. And they're getting ready to take over the entire world because these are some bad boys that break the rules. Get it? Breaking Bad. So that's why Palantir is up. Palantir, for those that are just joining, Oracle partnership this morning. Street's very excited about that. And the Street should be excited about that because I think that's going to lead to more partnerships. I just tweeted this right now. As you can see, the Street is very, very excited about it. And I think it makes a lot of sense. Oracle tried to buy Palantir in 2017. They've been keeping their eye on them for a decade. The Street basically thinks this deal can increase Palantir's distribution to all Oracle customers to potentially use Foundry and AIP, which is why the Street is pretty excited for this. So a good deal, not a bad deal at all. Super Renan says, to be honest, I almost sold my Palantir shares because I got in at 25.80. Here's my advice for the people that got in a little bit higher, 25.80, 26, 24.90, whatever sort of high average you have right now. This is one of those companies that can announce a deal, and that deal can get them up 5% in a day. I mean, like, it's just one of those companies that can do that. The liquidity that exists for Palantir. What do I mean by liquidity? I mean, demand for people that want these shares is at an astronomical level. There's not that many companies on the planet that have, Palantir's average volume is 40 million, 50 million, 50 million people a day that are trading these shares. The fact that that liquidity exists means that on any piece of news, good or bad, the stock can move. So if you got in at 25.80, if you have a higher average, I mean, look, my common advice is just, you got to try to take advantage of some of these circumstances in DCA. But I think selling it to try to time it to get in lower, that worked when Palantir was at 16, 17. I don't think that works anymore because my belief has been under 22. And we saw at 21.80, 21.70 yesterday, the demand is there to really eat up those shares. People want Palantir for a long time. Are you overpaying a little bit at 55, 60 billion? Maybe. But in the grand scheme of things, there's an AI startup called Cognition Labs that raised at 300 million 7 weeks ago. They are currently raising at about 2 billion. The AI startup valuations are starting to get insane. And it's not 2021 where like a picture of a rock is selling for $2 million. They're getting pretty insane valuations. Cognition Labs, they released Devin the other day. We saw it on the market open where they've built like an autonomous AI coder that basically can replace software engineers. The reason they're getting these valuations is because the market's like, well, OpenAI is at 80 billion. OpenAI is taking over the world. We know what the potential is of AI. We understand how transformational this will be. NVIDIA's numbers are justifying that AI does deserve a premium, and NVIDIA's growing so much, it's not even really getting a technical premium. So AI startups, if they're actually the real deal, if they're actually a Facebook in 2005, they're getting a bump in valuation. Palantir will be no exception to that, given they're a company that actually has revenue, has a fucking rock star CEO who can scare the shorts away by talking about cocaine. Like the short float on Palantir went below 100 million shares because the shorts, I think, are so scared of even touching Palantir because of a day like this where they can announce one partnership and this thing jumps 5.6%, that they're like, you know what? We're going to go short something else. The CEO is fucking crazy. He's mentioning cocaine on CNBC. We're just not going to mess with this guy. This is why it's a little bit harder, in my opinion, to now time Palantir on the buys and sells versus just DCA and hold for the long term. So those are my thoughts on Palantir, and that's why it's exciting right now. Think Real, thank you for the $20 super chat. Good morning, Amit. Congrats on your Vlad Tenev interview. Hard work pays off. Keep it up. Thank you so much, Think Real, for the well wishes and for the super chat. Again, the interview was really, really fun. It was exciting. My mom, I said on Twitter yesterday, my mom basically told everyone in India that we had the interview. Somehow all 1.3 billion people were related to, and all of them know about Robinhood now. So congrats, Robinhood. You guys are a big brand in India. So I said this yesterday. This was the picture. Look, either I'm very short or he's very tall. I would go with I'm a bit short. Right? I can't sugarcoat it. I'm 5'8" on a good day. He's like, what is that, 6 feet? This is probably 6 feet. Yeah, it's a good 6 feet. So he's a bit taller than me. But this was the studio, and they hooked it up really well. Like, I did not expect the team at Robinhood to really do such a good job building out the studio and making it look very nice. I mean, look at that right there. That's like, it looks like a real podcast set, dude. It really looks beautiful. And we both had our crossed legs. We were chilling. We were relaxing. And we got the interview done. So I said yesterday, I just want to thank Vlad and the entire Robinhood team for the hospitality. It's really difficult for public company CEOs to take their time to let me ask them questions. But he let me ask anything. Nothing was off the table. He sat down with me for an hour. Their legal team, they had one lady from HR or legal who was listening to the interview because, like, these public companies have to have these people in the room. She didn't stop the interview once. She didn't say, oh, he can't say that. It was a really smooth operation. And it was one of the busiest weeks in their company's history. So the fact that they gave me the opportunity to do this was really exciting. And last thing I'll say on this is I'll share more of this later, but if you haven't watched the interview, a lot of people are questioning, well, how are they doing the 1% match, the 5% APY, the 3% credit card? He was pretty damn transparent. The unit economics around how they're affording this stuff, I walked away with the interview understanding even more than I knew before I invested in Robinhood, how these guys are affording this shit. Because even I was like, dude, how the fuck are you guys doing this? And when he broke it down, I was just like, wow, like, I never thought of it that way. It's really just a question of like their revenue in comparison to the assets under custody and the yield they get from that, and then how they can divide that yield to give back to the customers. So it made a lot of sense. He was very transparent. I asked him about GameStop, right? I think I asked some decent hard questions. And so I think it was good. It was really fun. And now we'll just keep going forward into the future and see what other interviews we can get to keep doing. Philip says you guys are cute together. He's cool, dude. He's a really cool guy. Vlad is a very nice guy. He's a funny guy. One thing I didn't say is some of you guys might have heard this story yesterday, but basically before the podcast started, we were sitting together and one of the Robinhood employees was like, hey, Vlad, what'd you eat for breakfast? And Vlad was like, oh, man, I barely slept last night. I had to go do CNBC in the morning. I didn't get a chance to eat breakfast. And then me and my risk-taking big mouth was like, wait a second, Vlad, didn't you tell me you were eating Chase's fucking lunch for breakfast? And he started laughing, dude. It was a big, big, big laugh. He like actually, appreciated that joke. I know everyone here in the chat, all 1,273 of you, don't appreciate my jokes. One day you will. You'll appreciate it. You'll understand one day that these jokes are valuable. But Vlad did. And I think that also lessened up the tensions and it loosened him up to just be like, oh, this guy is like fun. He's like not going to be super serious. It's just going to be a chill interview. And it got to be a chill interview. And I think people enjoyed it. So it was fun. It was super, super, super fun. Okay, SOFI. Let's talk about these guys. We got the market open in 12 minutes. SOFI is up 768. Let's fucking go, dude. Up 1.79%. Why is SOFI up? Well, they got an upgrade yesterday, and that upgrade was to $10. The reasoning for that upgrade was $8 on the actual lending business and $2 for the tech side of the business. Kyle Peterson, he's an analyst at some firm. He's a 57% positive rating on tip ranks. He came out and he basically said, guys, this thing is undervalued. And he put out a pretty extensive report explaining why it's undervalued. And so now we got SOFI potentially trying to make a move to the $8 range. We have earnings on April 29th. If they can crush earnings and the sentiment can change, which, by the way, the sentiment can change very quickly. After Palantir earnings, we saw that sentiment go. We never saw below 20 again, right? We never saw below 21 again. Like that sentiment changed dramatically. Same thing can happen with SOFI if they execute. And I think they need to just really execute on this earnings because this is their chance where sentiment's starting to get better. They put up a good earnings. Maybe the stock can start to move a little bit higher. So right now, SOFI up 7 68, up 2% in the pre-markets. Not bad at all for SoFi. Palantir, 5.37%, 23.89. S&P 500 up almost 1% in the pre-markets. Again, if you're confused why the market is moving, we got really good ISM data yesterday. We got some decent jobs data today, and the market's starting to reconcile with the fact that, wait a second, inflation is coming down. And so our random fears that inflation is super sticky that we had for 2 days out of nowhere, those were irrational. And we need to remember that if inflation is coming down, Fed will lower rates, which means if the Fed lowers rates, money is going to come back into the markets. 207.98 right now on the Russell. That's up. Elf Beauty is up 1.83% today. It was down 11%. Ulta Beauty was down 14% yesterday when they readjusted their sales for 2024. So the market basically tanked all of the makeup stocks. A report came out today by one of the banks saying, you know what, this is an overreaction. We're initiating a buy on Elf because even if 2024 is not going to be the best year, this is still a really good long-term stock in the makeup industry for the next 5 years. I don't know that much about Elf, but it is something to, I guess, look at, being down 12% yesterday on another company's piece of news. Not really sure if that's going to affect Elf themselves because they're a bit of a different company with their go-to-market, but that one was down a bit more. Taiwan Semi up 1.49%. Intel was down. Taiwan, obviously, we saw there was an earthquake yesterday. None of the Taiwan semi manufacturing centers were affected by that. 97% of all semiconductors are built in Taiwan. So it was, really good that that place stayed stable and safe and nothing was affected there. Intel was down 8% because they readjusted their Intel Foundry revenue expectations and said, hey, we're not going to be profitable till 2030. Intel Foundry is basically their attempt to build what TSMC is building in Taiwan, but in America to an extent. Not as big, but at least to an extent. And we're going to talk about it more today on Chip Chat. Me and my guy Jose are going to do a podcast at 2 p.m. talking about that. But that's why they were down about 8%. And up a little bit today right now in the pre-markets. Robinhood, 1950, up 1.51% in the pre-markets as well. NVIDIA, 904, 1.65%. Snowflake moving a little bit, 1.09%. Bitcoin, wow, 67,500 on Bitcoin. I did not see this all morning. I think I looked at it earlier and it was at like 66.4, but right now, Bitcoin at 67,448. So let me show you guys the inflows yesterday on Bitcoin. It actually had a really good day, and markets reacting to it. Now, Bitcoin tanked from 71 to 63 over the past 2 days, which is why like a lot of the crypto stocks also had some issues. But inflows yesterday, so let me refresh this. Okay, so 42 million from BlackRock, 116 million from Fidelity, 23 million from Bitwise. ARK-B had nothing. ARK-B lost 88 million the other day. That's Kathy's fund. And 75 million in outflows from Grayscale. So over the past 3 months, since the ETFs launched, there have been 12 billion in net inflows to the 12 or to the 11 Bitcoin ETFs. 14 billion for BlackRock, 7 billion for Fidelity. Those are the ones leading the way. And there have been 15 billion of outflows from GBTC, which has been a strain on the Bitcoin ETFs, but it's something that just has to happen in order for this to eventually move forward. So we had some good ETF numbers yesterday, and market's probably reacting to that a bit more at this 67,000 level. And we'll just see how it keeps going from there. Mr. Seymour Duck, $5 super chat. Thank you so much. Congrats on the interview. Thank you for that, Mr. Seymour Duck. I'll be talking about the Disney Nelson Peltz drama after the market open bell. I got to learn a little bit more about it yesterday, and it's very interesting. Nelson Peltz ultimately lost, but the way this whole thing navigated itself, Elon Musk voiced his opinion on this morning as well. We'll talk more about it. Overall, Disney seems like they're going to be okay, and Bob Iger is going to have full control. But Nelson Peltz, activist investor, did put up a fight. Let's talk about Tesla before we get into the open bell. Let's talk about Tesla. So yesterday, Elon Musk liked one of the tweets that I posted on Twitter, and that tweet had to do with Cathie Wood's price prediction on Tesla. So Cathie Wood believes that Tesla still should be $2,000 a share by 2029, so 5 years from now. And Elon liked that tweet, which maybe Elon believes that they will get to $2,000, which would put Tesla at a $5 trillion market cap. I think that's going to be a little hard. I think like $1,000 is very possible. That's a 10x. That's still amazing, or an 8x. Or no, from it's like a 5x ish, right, to get there. To do 2,000, I think is going to be a little harder for that to happen, but that would put Tesla at about a $5 trillion market cap. Now, remember the math we did a couple days ago for Tesla to even do 10% CAGR on their vehicle deliveries this year, they would need to do 531,000 cars a quarter. Elon yesterday said Ross Gerber is an idiot. And the reason he said Ross Gerber is an idiot is because Ross Gerber is blaming Elon's tweets for Tesla not doing well. Whereas Elon says, look, BYD is also didn't do well. So it's not just us, it's also BYD. Ross Gerber yesterday saying basically Tesla can't sell its cars due to Elon's behavior. We should stop blaming the Red Sea or Germany. We should stop blaming interest rates. We should blame Elon Musk himself. I would disagree with this. I think interest rates are a bit more to blame than just Elon's tweets. I think Elon's tweets have a minimal impact on this, but the comments were divided underneath this. A lot of people actually thought Elon's alienating Democrats from buying Teslas, which is interesting. And so that's why Tesla is suffering. I don't think that's the case, but I do think there is a little bit of a demand issue. So if we look at Tesla's inventory supply, it's up 42,000 cars quarter over quarter. Usually Tesla does not have inventory left, right? Usually they're struggling to get it out the door because, there's that much demand. So forget the Elon tweet stuff. There might be an overall demand problem with EVs, at least in the United States. We definitely know there's a China issue because BYD is, undercutting Tesla by like $30,000 in terms of their prices. But the fact that Tesla had that many more vehicles, it makes it a little bit hard. I do agree with the bears. It is a little hard to blame interest rates because if you have that many cars available, yes, maybe people don't want to buy because it's hard to finance a Tesla, but the vast majority of people that are buying a Tesla can afford a Tesla. So they can afford a little bit more on the interest rates. It does have an effect, but given you have so many cars left in inventory, maybe it's not the biggest reason for why you only sold 387,000 cars, which was the lowest since April of 2022. So it was a horrible miss. Now, having said that, Tesla stock is doing pretty damn well. I mean, if we just look at Tesla stock, you would think this stock's going to 150, given that number was one of the worst numbers Tesla has put up in a very long time. Stock's at 170. It's down 3% from 179 last week. Like, there have been a decent amount of people that were willing to buy this dip, and they bought the dip. And I don't think that's just retail, dude. I don't think retail brought it back from 161 to 170. I do think some institutions were like, this is a small headwind, and eventually they'll be fine. And they started buying up the stock. And so regardless of the bad delivery number we got, the stock should be down way more. I mean, you would think the stock would be ready to go to the 150s. My thinking now is that maybe Q1 earnings, this bad news is baked in, the sentiment is baked in. And when the sentiment is bad, that's the time to actually take a deeper look at Tesla. Another firm yesterday downgraded them to $122. JP Morgan cut their price target on them to like 140 or something. So sentiment I don't think there's ever been a worse time for sentiment than Tesla other than 2018. Like 2018 is the last time I can remember this being as bad as it is right now. And maybe that means that Tesla's a little bit in a decent situation if sentiment is that bad because people want to end up taking advantage of the dip. Rivian won't be profitable for at least 3 years. Dead money. Yeah, I agree. I don't know if it's dead money, but I do agree that Rivian is going to struggle with profitability. So in a world in which a lot of these other EV companies, Lucid, Fisker, I mean, these guys are jokes in comparison to Tesla. If they're going to struggle and EVs are the future and FSD is real, you can make a reasonable bull case for Tesla, even with the bad delivery numbers. And I think that's what at least the street is showing they're leaning on, because if they weren't leaning on this, the stock would be down a lot more. And the stock is not down as much as I guess we thought it would be down. So we'll see. We'll see where it goes from there. Mitch says it got smashed already. That is true. It did fall from 260 in 2023 down to this 160 range. So it is down $100. It's down almost 400 billion in market cap. And when you're down that much, that ends up leading to some people getting excited to buy the dip. We got the market open in about 30 seconds. Meta price target raised to 585 at Jefferies. So Meta price target has been raised at Jefferies, and Amazon price target at Jefferies has been raised to 225. So Jefferies upgraded Meta and Amazon today. That's why both of those stocks are up as well in the pre-markets right now. Meta obviously doing phenomenally well. The Jefferies believes that Meta is going to put up a double-digit ad growth for the first time since 2015. So that's why they're excited. And then for Amazon, they're really excited about AWS growth and also their advertising business as well, which is why Jefferies upgraded both of those stocks this morning. All right, 9:30 a.m. Tuesday, April 4th. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Tesla opens at $170, up 0.97% on the day for Tesla. Intel up about 0.4%, $40.49. SOFI 1.32, baby. There we go. 764. Let's see if we can keep this momentum going. SOFI again got a price target upgrade yesterday to $10. Now up 1.39%. It is up from those lows of $6.80. IWM 208. Russell. Nice up 1% on the day. Palantir 2393. They are up 5.3% on the day. $24. There we go. Up 5.9%. Street seems like they like the Oracle partnership. If you're just joining, Palantir Foundry instances are now going to be running on distributed cloud servers for Oracle for the government side of the business and for the private side of the business, for the commercial side. So that has got the street basically thinking, wait a second, they're going to increase revenue on both sides, which is why this is going to be a good deal for distribution and customer count going into the future. Palantir up 5.87% on the day. Spotify trying to touch $300. They increased prices yesterday for their subscription plan. Let me know in the chat, do you have Spotify? First, and second of all, would you cancel your subscription if it goes up a couple bucks? I'm imagining the people that have Spotify would not cancel just because they have to pay $1 or $2 extra, which is what the street is thinking as well, which is why we're going to have some additional revenue come in for Spotify and hopefully some more profitability. S&P 500, 523, Ulta Beauty up 1.46% after being down 15% yesterday. Robinhood, 1924, up 0.03% on the day. Coinbase, 259, up 3.28% on the day. Apple at 170. What's interesting about Apple? Apple is exploring robotics as a consumer product. The Verge reported this yesterday as a potential next thing that they're getting into. So they didn't get into cars, they scrapped the EVs, and now they're looking at robots. I guess we'll see what happens when it comes to robots. Maybe they get into that, but the street's like, all right, well, at least maybe robots will be the next growth curve. So we'll buy the stock if robots are going to be a thing. So we'll get updates on that in the future, and we'll see what happens from there. CleanSpark up 7% on the day. Bitcoin is up 3%. So CleanSpark up 7%. Again, CleanSpark got sold off pretty aggressively from 24 to 16 over the past couple of days. So that one has a nice pop up 7.4%. NVIDIA 902. MicroStrategy up 5% on the day. Again, Bitcoin goes up. MicroStrategy goes up. I know there's a new firm on Wall Street that's trying to short MicroStrategy because they believe it's trading at too high of a premium in comparison to the spot Bitcoin price. Mathematically, they're probably correct. However, sentiment around Bitcoin and the narrative matters way more than the math when it comes to people buying up the stock. And so if Bitcoin goes up, MicroStrategy will go higher. I don't think the street's going to be like, oh, well, there's a technical, the premium that shouldn't be there. Like, no one cares. People are going to buy it. Same thing with Coinbase. Everyone thought the ETFs, including myself, I was like, Will, what if the ETFs take away trading volume from Coinbase? They were never going to do that. Coinbase is going to go up. If Bitcoin goes up, people are going to trade. Coinbase is going to print net income. So MicroStrategy going up as well. Google down a little bit on the day, down 1.52%. Google also announced yesterday that they're going to now charge for AI. So they announced a pricing strategy shift. The Financial Times reported that Google is getting ready to gear up for a big consumer subscription product when it comes to monetizing AI and a couple of other ways they're thinking of monetizing it. And that's why Google was up yesterday, 157. It's down about 1.39% today as the market opens. Celsius up 3.5%. Truist up 1%. That's a regional bank. Microsoft 424. That is up 1%. Enphase, wow, 122. Enphase is up 3.26%. Amazon, $4 away from 188, which is their all-time high right now at 184. Look at that V-shaped recovery. Got to $81 back in January 2023, up from a high of 188 back in July 2021. January 2023, they were 84. Now they're back at 184 here today on April 2024. So really, really exciting stuff for Amazon. DJT, why is that down? I don't know, but that's down probably because people are selling. Again, this one's very volatile. I don't know what this thing is going to look like. Still worth $5.42 billion for a company that does a couple million in revenue. So you got to be very careful with this one, but it could pump just as easily as it could go down as well. AMC up 1.31% on the day. AAP, Advanced Auto Parts, that's up 0.34%. Unity, $25.95, that's up a little bit. Let's look at the Mag 7. All of them are up today except Google, which is reasonable because Google has run up a little bit over the past week. Nvidia 904, Amazon 184, Meta 522. Wow. This is a new all-time high for Meta, right? Yeah. New all-time high for Meta. Wow. 52-week high was 523. They're at 522. Meta has just been one of those stocks, dude. If you own Meta, even if you bought at 395, Meta's done well for you. Absolutely incredible. Absolutely incredible. Pretty amazing for that. Okay, let's see what people said in the chat about Spotify. So Tanner says, I have Spotify, but I also have YouTube Premium, so I should just use YouTube Music as I'm pretty sure I'm paying for it. Yeah, I had Spotify all throughout college, and then when I graduated, I realized I started paying for YouTube Premium, which is like $14 a month or whatever, but it includes YouTube Music. So I was like, why would I pay $10 a month for Spotify if I'm getting YouTube Premium with no ads on videos and I'm getting YouTube Music? Logically, the rational thing to do was cancel one subscription because you're getting the same service on something else. But a lot of people love Spotify, at least in the United States and in Europe and in Sweden. Like, people love Spotify. They love the user interface. They love the playlist. It's really hard to sort of take your playlist to another platform. It's not that difficult, but people have an affinity and a sort of emotional reaction towards it because it's music. So Spotify is in the best business in the world because music is something people never want to leave, right? Music is music. It reminds you of your first love and all this stuff, right? Your playlist. But music is music, so it's the worst business in the world because the record labels are ready to take every cent out of the revenue you make from music because you don't own the content. So it's a really tough situation, but the street has basically said, all right, Spotify, if you're going to grow users, eventually you'll grow profitability. And so we're going to take the bet that you're worth $60 billion because you're probably going to get to 1 billion users in the next couple of years. Right now, they're at about 600 million users today. Palantir 2385 up 5%. Oracle up almost 1% on the news as well. SOFI continuing the momentum up 1.23%. Really nice to see SOFI continue to maintain some of these levels. Robinhood down 1.17%, 18.99. Not sure why Robinhood is down. Probably people taking profits, most likely. Again, as Robinhood falls to this 1880, it fell to 1807 the other day. In my opinion, from me looking at the book order volumes, as soon as it falls, people are ready to buy up shares. Just that's like the anecdotal evidence I'm seeing as I'm looking at the volumes. When I see it falls down a couple cents, there's people ready to swoop up those shares if you just see the orders coming in. So as it falls, right, and there's a lot of times randomly people just decide to take profits. The question is just, will people buy the dip on those? And so far, what I've seen is people do buy the dip. And we'll see further if that continues to be the case for Robinhood. Bitcoin right now, 67,349. Boeing 186. Apple 170 on the day right now. What else do we have here? Kelly says that's down because people are probably selling. Love your high level analysis. It's true, dude. Simplicity matters. Simplicity matters. You know, at the end of the day, it's down because people are probably selling. That's a good reason. That's why something's probably down. MicroStrategy above 1,700, not bad. Reddit 47.30, Rivian 10.54. Rivian bottomed at around $10.07. QQQ at 4.46 on the day as well. Not bad. Not bad at all in the context of how this market is opening this morning. Insider trading. One thing I want to show you guys. I don't know if this is a scheduled sale, but Tim Cook did sell $200 million worth of Apple yesterday. So he sold 196,000 shares. Again, these documents are always super complicated to read. Like, I always try to see, is it scheduled? Is it not scheduled? Is it a direct sale? Is it not? And I wish there was like a website that just made it super easy to like understand when an insider sells. Is it like, are they actually selling, or is it like a scheduled thing or something like that? But from what I'm looking at, it doesn't look like this is scheduled. It looks like he's selling outright. That is my assumption here. And he, as you can see, he sold 99,000 shares at 170, 97,000 shares at 168, and then 165 shares at 169. So he booked 33 million in profits. It's not that big of a deal, in my opinion, because Tim Cook usually doesn't sell stock. I know he sold like 50 million like 7 months ago, which is, you know, insiders sell. It's not that big of a deal. But the timing of this is peculiar, that at 170, and that's why it's hard for me to say this, because I'm like, is the timing peculiar, or is it a scheduled sale and the timing doesn't matter? Because a lot of times the things we read into when it comes to insider selling really doesn't matter, because these guys had to sell no matter what. But if he just outright sold, then it's a little weird, because Apple's struggling. I mean, Apple's down 10% year to date. Shareholders have not been happy with Apple's performance, and you can't blame them. Apple's really not growing, so it's hard to pay a 30 PE. We all kind of saw this at $200. Like, it didn't make that much sense. But Tim Cook selling right here is a little weird, booking some profits here. But, maybe it's just a scheduled sale. Maybe it's not that big of a deal. Palantir 2354 up 3.68%. So market cooling off a little bit. Palantir was at that 24 level. Now it's at 2350. People taking some of their profits. Not that crazy. So we're seeing a little bit of selling. Nvidia 897 as well. CleanSpark 1735. Snowflake 154. Alibaba 73. That one I think will go up if China actually follows through with their capitalism free market reforms that they're saying they're going to institute, that they're probably not. But if they do, maybe that one inches a little bit higher. Apple right now 170.78 up a little bit on the day. Tim Apple panic sold. Could you imagine? He was like, damn it, we don't have the cars. Generative AI is a dud for us. We don't have any LLMs. We don't have any ChatGPT competitor. Now we're going to try to do robots. Who knows if robots are going to work? Screw it. Let me just book some profits right now. Maybe. You never know. A CEO, sometimes they think like that. Or Tim Cook's honestly probably not thinking like that, in all honesty. But if he was, it would be kind of funny. Because that's how investors feel right now when it comes to Apple. Investors feel that it's a little annoying that the thing's just not moving, and Apple's kind of throwing stuff at the wall and seeing what sticks, but we don't really see if there's stuff to stick for. Let's get an update on the Fed and what Jay Powell said yesterday. So I said Jerome Powell spoke at Stanford yesterday. Here's a summary of what he talked about, and we get some analysis on what that means for interest rates going into 2024.
Some point this year, but the Fed chair speaking at the Stanford Graduate School of Business says it will not be appropriate to lower the policy rate without greater confidence inflation is coming down. He cites the Fed policy statement in making that comment. He said the Fed has time to let incoming data guide its decisions, and the policy rate, though, is likely at its peak. That's the good news. Inflation, he says, has come down significantly, but it is still running above the Fed's 2% target. The job of sustainably returning it to target, quote, is not yet done. Then he talks about the recent economic reports on jobs and inflation. They have come in, he says, higher than had been expected, but they do not, quote, materially change the overall picture. So what he's looking for is he sees solid growth in the economy, labor markets rebalancing, getting a little less tight in the labor market, and inflation will be moving, as his forecast, towards that 2% target. But he cautions it is too soon to say whether the recent inflation readings represent more than just a bump on the road toward that 2% target. He has a section there where he talks about risks on both sides of the equation, both the risk of reducing rates too early and reducing them too late. But monetary policy is, quote, well positioned, he says, to confront both risks. The Fed decisions, he has a section in here where he seems to be addressing concern about political bias in Fed decision making. He says all of their decisions and analysis are, quote, free from any personal or political bias. And he goes on to say the Fed needs to avoid mission creep, and specifically in relation to its role in the climate change debate. So
basically the Fed and Jerome Powell said everything they've been saying for a very long time, which is why it's so ironic that the market reacted yesterday, because he has not changed his sentiment over the past 2 months. And so for the first 2 days of April, when we were down, it was just weird because it was just like, well, why are we down? Why? What excuse is the market looking for? And then Jay Powell comes out yesterday, says the exact same thing. The market's like, you know what? Yeah, like, I don't know why we were being weird. And so Jay Powell reiterated what he said, 3 cuts probably coming this year. Market believes it. Inflation data came out yesterday. That was good. Stocks are up, and that's what we got going on. PayPal 66.2 right now. Really nice to see PayPal holding this 66 level. Trying to make its way to $70, which will be, I think, good psychologically for PayPal. SoFi 767. It hit 771 a couple of minutes ago. Right now, 765, up 1.39% of the day. Let's see if we can get to that $8 level. That would be really big news. Remember, SoFi is sold short 23%. So the shorts on SoFi need to make a decision on if they think the upgrade that they got yesterday is a fluke or if it's a real thing, and do they want to still be short going into earnings. SoFi has 230 million shares sold short. They have 1 billion shares outstanding. So it's a decent amount of shares that are sold short, and those shorts might get wrecked if earnings go well. Those shorts might not get wrecked if earnings go bad. And I think they're gonna have to make that decision. And if they make the decision that, hey, earnings are gonna go well, maybe they cover before earnings, which could also get a little bit of a pump in the context of what's gonna happen for SoFi. And that's what we're seeing right now here. Fred says he bought the ELF dip at 164. Yeah, let me know what you guys have been buying this week. Have you been buying anything this week? And have you been selling anything this week as well? Because I know those first 2 days kind of were very interesting to start off April. So let me know in the chat if you've been buying or selling anything. Here's a chart from a macro perspective that I wanted to show. So Bob Elliott tweeted this today. The banking system is looking good despite the 60 basis points rise in the long end recently. If anything, signs of things are improving for both small and large banks. This suggests financial stability concerns won't impede further long end rises, starting with deposits are flat or picking up. So as you can see right here, in the context of the deposits, so this is a chart for deposits for small commercial banks, that's the blue, and then large commercial banks, that's the red. Deposits are going up. As you can see, we had a nasty fall right here at the March 2023 level, this big blue drop. Those are for small regional banks, essentially. That's when Silicon Valley Bank collapsed and deposits collapsed, right? Because people were very afraid that if deposits are collapsing, we need to be, or if banks are collapsing, we need to take our money out of these smaller banks. And as you can see, over the past year, now we're basically a year into the Silicon Valley crisis, deposits are going back up. So this is really good. $11.5 trillion of deposits currently as of April 2024 in regional banks, and about 10.7 trillion, 10.9 trillion in the larger banks. That is very good for the economy because it means people are trusting banks. If they're trusting banks, banks have the money to loan out. Banks need money to be able to run their business. And when interest rates come down, all of the paper losses that a lot of the banks, including the regional banks, have on their books, Bank of America basically has like $100 billion in losses. Same thing with JP Morgan. As interest rates come down, those losses starts to come down, which is really good for the broader economy and really good for banking in general, which is why XLF, which is one of the main banking ETFs, is up right now as well today. And so that's what we're seeing for banks. TFC, one of the broader regional banks, that one, look at that, 38.43. That's up 1.26% as well. Again, the reason that's up is because that's one of the larger regional banks, and their balance sheet looks pretty decent to investors as long as interest rates come down, might be able to perform well over the next few months. Robinhood 1889, that's selling off a little bit, down 1.67%. CleanSpark is up 6.7%. Snowflake 153, Apple 170, Bitcoin 67,400 on the day. Reddit 47.49, MicroStrategy $1,700, up 5% on the day. Dell is having a hell of a week. Dell was up 9% yesterday. It's up another 4.6% on the day. If anyone's in Dell, let me know. We talked about Dell after their earnings. They sold off for a little bit. The reason why Dell was exciting is because they are trying to get into the business that SMCI is getting into. I mean, they're already in that business, which is the server racks for the GPUs. SMCI up 1.43% of the day. Now SMCI 1030. It's not even that big of a deal, right? All of us look at it and we're like, yeah, it deserves probably to be $1,000. Whereas 3 weeks ago, we were like, how is this thing above 1,000? Well, it's in the S&P 500. We're seeing NVIDIA numbers. You need servers for GPUs. SMCI provides that. Dell, which has been a dormant company for the past 10 years, is starting to provide that. And the market's reacting to that pretty aggressively. It's up 13% in the past 3 weeks. As you can see right here, it was at 104 on March 18th. That's when it sold off a little bit. It was at $80 before that. Now it's at 134 right now. So exciting to see what Dell's getting into. Maybe Dell is a sort of underrated AI player if they end up making that server business a lot bigger than when the market thinks it can be, which is why they're getting a little bit of a premium right now. And that's another thing that's so interesting about this AI rally that we're seeing. Random companies like Dell, like no one thought Dell, which makes like computers that, I mean, people use, but people just don't care about that much anymore. No one thought they would have a resurgence because of AI. I think Dell is the classic story for anyone who's still skeptical about AI being a real thing to take a step back and be like, wait a second. An entire company is re-architecting their business model and investor sentiment where they don't have to rely on dividends. They can actually show capital appreciation because they have found a revenue stream because of a transformational thing that it's happening, a industrial revolution 2.0, that is AI. And if Dell is able to monetize that, you could just imagine what NVIDIA, Palantir, et cetera, these companies are going to be able to do. So I think that's largely bullish for the broader market and for different AI plays as well. And that's what's going on right now with Dell. Someone says, where do you think Palantir is going to be in 2027? I have no idea, but I do think $30 by the end of the year is not crazy. The reason I'm putting that number out there is because if you look at the customer count based on the Foundry links that we're seeing pop up, EtherSquare. I talked about this in the Daily Palantir episode 2 days ago, but he tracks all the different Foundry pilot links that exist on the internet. And in Q1 2024, we have had the most links that we have had in any Q1 ever. It's a little bit above 310. So when you look at this, this doesn't mean we're getting 310 customers next quarter, but this means that we have the potential to have these customers that are using these pilot Foundry links become real paying customers. And the new Oracle partnership today means that there's going to get massive distribution. You could count on like 5 or 10xing the distribution Palantir has into the commercial and government ecosystem by getting those people on their software because they're using Oracle distributed clouds. And the boot camps are, picking up pretty aggressively, as per Karp's words. So from that perspective, I do think 30 by the end of the year is not crazy. At the beginning of the year, I thought 25 would be a blessing. We've seemed to have crossed that many times, and the market seems to have the sentiment to buy the shares at those levels. But $30 is going to be hard to justify valuation-wise unless we increase growth. We're going to have to do 2.8 billion versus 2.65 billion in revenue, which would be like 24% growth versus 19.9 for the market to really justify that valuation. But I think we'll get there. It's just a question of execution. And even if Q1 doesn't have those numbers, by Q4, I think hopefully we can have those numbers as well. And so we'll see. We'll see how it goes from there. Anthony T, thank you for the $10 super chat. Congrats, Amit. Super proud of everything you've achieved in the past few years. Keep up the great work. Thank you, man. Really appreciate it so much. Thank you for being here on the morning stream as well. Had a lot of people reach out yesterday that have been watching the channel since like under 1,000 subs. A lot of these guys had my personal phone number, and so they texted to congratulate on the Vlad interview yesterday, and it was fun. It was really good. It's really been awesome to see a lot of people that have been here for the past 3 years kind of keep up with the entire journey. And so thank you to everyone who reached out. It was really, really fun, really, really awesome. And I went to a dinner, not a dinner party, but we have these neighbors that invited us for dinner yesterday, and I went there, and they have a 13-year-old son, and he's like a really curious guy, right? So me and him just get to talking. By the way, the family I went to, the husband, so the father of the kid, he's friends with my dad. So this was like the first time we just had like an official dinner. This dude is running a diamond empire. Like I got to talk to him for an hour, and I know so much more about the diamond business now. Like he imports diamonds from India and Thailand, and then he has all these distributors in New York. And it was so interesting just to pick someone's brain about how they're kind of like, how they've built their wealth, right? And how they're running their business. And so it was just really interesting to get to talk to him about the business of diamonds. But his kid, who's super curious, he was like, so what do you do? I was like, oh, I'm on YouTube. I do video streams. And obviously to a kid who's 13 years old, like they all want to be YouTubers. So he actually thought that was pretty cool. And he was like, what do you talk about? And I was like, oh, I talk about the stock market. And he was like, you know what you need to do? You need to get a really big stock CEO. That's how he said it. He was like, you need to get a stock CEO on your channel, because I think a lot of people will like care about like those big CEOs in the stock market, and you should like get him on your channel. And I looked at him and I was like, that's a really good idea. I think that's a fantastic idea. And then he Googled my channel, and he was like, the CEO of Robinhood was with you yesterday? And I was like, yeah, we actually talked. We had a conversation. And so to that kid, I was the coolest person in the world last night. To my sister, who didn't even watch the interview because she was like, yeah, I got bored after the first 5 minutes, and I don't really know who this Vlad guy is. She doesn't give a fuck. So at least a 13-year-old kid in my neighborhood thinks I'm cooler than my own sister, who really does not give a shit. But it was cool. It was really cool. Okay, we got Disney at 119. We got Meet Kevin's PP 2692. Again, he liquidated all of his Tesla. How's Tesla doing right now? Where is Tesla? Tesla 169.29. Tesla holding up? Tesla holding up pretty damn well. You would think Tesla would be down a lot more than it is, but Tesla is holding up. And Tesla's not getting hit as hard as it was before. Let's listen to Barry Diller. He just came on CNBC, and he had something to say about Truth Social, which is Trump's SPAC. Let's see what he has to say about DJT.
Political question about former President Trump, but actually a business question about Truth Social. You've seen this stock on the move in this, I'll call it remarkable, maybe even crazy way.
Just say 2 words: GameStop.
GameStop. That's what you think is going on here.
It's ridiculous.
Do you
the company has no revenue?
But do you think it could ever be a bigger business? Do you think if he wins the presidency, it becomes?
Why?
I'm asking.
Why would it be bigger? Look, he's only interesting now because he's out there entertaining the folks. I hope if he does get elected, he just plays golf for 4 years. But
So do you think that all of the investors in this are getting scammed? Do you think they think this is a transference
I don't know.
of
I think
wealth from one side to the other, and that's the goal? What do you think is happening?
I think they're dopes. I mean, who would buy a company that literally has, I mean, I think, what does it have? $30 of revenue? Why would you how could you put a value on it? They're buying it for other reasons, just like they bought theaters when there was no theater business, or they bought GameStop or whatever. It's stupid. It's stupid stuff.
It was 1,000 times revenue, I think. I think
Okay.
it was wasn't it 4 million? It was
$4 million in revenue. That's $4 million in revenue. It's ridiculous. I'm not saying it's not real.
4 million.
Why are you even talking about this? It's a scam, just like everything he's ever been involved in is some sort of con.
Let me pivot and ask.
Amazing survival of a con man is just beyond comprehension, but there it is.
I got a question.
All right. So Barry Diller, not a fan of Trump. For those that don't know who he is a chairman and senior executive of IAC and Expedia Group, which is the traveling company, and he founded the Fox Broadcasting Company and the USA Broadcasting Company. He was inducted into the Television Hall of Fame in 1994. You may be saying, hey, Amit, how did you know all these stats about Barry Diller? I am an encyclopedia, and I know these things. It's not like I'm staring at Wikipedia as I'm saying these things. I am Wikipedia, which is why I know who Barry Diller is. Nonetheless, the people who are buying Truth Social, before he says it's a scam, you've got to remember Susquehanna International Group, which is a big hedge fund, has 600,000 shares of Truth Social. Now, the question is, do they see value in Truth Social? Probably not. Do they see value in influencing Trump to get elected so that he doesn't have to ban TikTok, which Susquehanna has a very large stake in TikTok? Probably. So is it a scam? I don't know if it's a scam, because at the end of the day, people want to elect their own money and people can make their own decisions with their own money. But it definitely is, I would argue, a little overvalued. And some of the people that are investing in this thing definitely feel that if they invest in this, they can help advance their agenda more so than make money off the stock. That's kind of how I would put it there. So that's what it is. It is what it is. Look, at the end of the day, the reason I'm kind of sympathetic to DJT is because investing is all about perception and narrative. So is it overvalued? Yeah, dude. It does $3 million in revenue. It's a $5 billion. Like, yes, we all know it's ridiculously overvalued, but investing is perception. And if the perception of people that support Trump feel like this is a way for them to support their candidate, they have the freedom to buy the stock. They also have the freedom to lose a crap ton of money when Trump potentially dumps those shares after 6 months and his lockup period is gone, which might happen. But it is what it is. It's America, right? You have these freedoms. And so I guess we'll see how it ends up playing out. But that is what we've got going on right now in the context of DJT and ultimately where the stock currently stands. Narratives drive the world. That is correct. Narratives absolutely drive the world. And it's really important to recognize that. And the other reason I'm sympathetic towards this is because you can lose money sometimes by not looking at how narratives operate. If you're in a stock and the narrative is bad, you can lose money because the stock might fall. If you're in a stock and the narrative is getting better and you're just waiting until the narrative finally changes, you can make a lot of money. We've seen this with Palantir, right? We've seen this with Robinhood to an extent. So narrative change. Snowflake, narrative's really bad that CEO left, right? And so if you're in that stock and you're like, yeah, well, technically it's undervalued, the street's overreacting. Sure, the street may be overreacting, but the narrative is that Frank Slootman is leaving a falling ship. Maybe that's a bad narrative, but that is the narrative. And that is ultimately how the market is affected as a result of that. And so all of that ultimately matters at the end of the day when it comes to how the market perception relates to this stuff. Thomas says narratives are short-term, numbers are long-term. Yeah, I agree. All right, we're seeing a little bit of a sell-off here, folks. So DJT down 5%, SMCI up 1%, SoFi 758, Spotify 298, Palantir 2314, not able to hold that 2370 level that we got in the morning. Oracle deal is a very big deal going forward. I think it's going to be very important for Palantir, but at least so far, the market is not able to maintain some of that momentum, and we're seeing some red candles there. Robinhood as well. No news came out from what I'm understanding on Robinhood. I think people are just taking profits at the end of the day. We saw this happen a couple of days ago where Robinhood fell to like $18.07. So yeah, it's down 2% of the day. People taking some profits, and we'll see how that one ends up from there. Entire market falling a little bit. Again, everything is green, but it's not as green as it was like 20 minutes ago. So we're seeing some profit taking, very normal. And overall, we're not seeing the sort of red we saw the past 2 days because that inflation data came out yesterday. That was good. But markets are taking a little bit of a breather as we get into the first couple days or first couple minutes of the market open today. Chris just sent me a text message right now, and he sent me some nice Verizon calls that he has. Is Verizon up today? Is Verizon up? Where's Verizon right now? Wow, Verizon's up 1%, 43. Yeah, Chris's position on Verizon is not doing that bad right now on Verizon. Obviously, Tesla has not performed as well as Verizon since the start of the year. And kind of the debate was, how's Tesla going to look versus Verizon, given one is a growth stock, one is a value stock. And Verizon, even though it got beaten up at $29 back in July, it's doing a lot better than Tesla. But Tesla down 30% year to date. It is still holding up 168 right now. You would think those delivery numbers sends that bad boy to 153. It is holding up. And it's holding up not too bad because of it. Lisa says, Amit, any insight on Unity software? Is Kathy still collecting them? Yes, Kathy's collecting Unity. I would not follow her into this one. Unity stock-based compensation is disgusting. And Unity, although it is you would call it duopoly with Unreal Engine in the gaming space, the problem with Unity here is that they are not profitable. And their guidance was horrendous. They readjusted their guidance. Street wanted 2.2 billion in revenue. They're going to do 1.78 in 2024, 500 million less in revenue than the Street expected. So if you're thinking of Unity from a fundamental perspective, long term, maybe it makes sense if you're interested in the gaming sector. If you think in the short term there's a pump coming, that revenue guidance was really bad, and I don't think they're going to grow anytime soon. Given they had a new transition for a CEO, it's just not a stock I would touch. Kathy's knee deep into it because Kathy is deep into a lot of these companies. But this one, not in the best situation, in my opinion, to get into. SoFi 758, Google 153. Palantir still holding that 23 level right now, 23.12. Intel 4062, IWM 207. Elf Beauty 166, seeing a nice little rebound today off of the downgrade, or not the downgrade, but the downfall it had yesterday, down 10% because Ulta fell 10%. Robinhood 1880 down about 2%. Nvidia 897, and then CleanSpark up 5.28% on the day. All right. That is it for me on the day, folks. Thank you all for being here. Let's get through word of the day, and then I will get you guys out of here. Word of the day. Okay. This is an interesting one. Umbrag.
Umbrage.
Come on, dude. It looked like Umbrag. It looked like Umbrag, dude. Did anyone really think it was Umbrage? Did anyone really think it was Umbrage? It looked like Umbrag. It looked like freaking Umbrag. Offense, annoyance, or displeasure. Okay, so the professor's umbrage at the student's disrespectful behavior was palpable during class. His sarcastic remark caused her to take umbrage and storm out of the room in anger. It looked like Umbrag. I'm sorry. It looked like Umbrag. It looked like Umbrag with a silent E. That's what that's what it felt like. It felt like Umbrag with a silent E. Did you not see the E? I thought the E was silent, dude. I thought it was silent. Umbrag. It's like umbrage, you know? It's like French or something like that. That's what that's what I thought. Just another day of butchering English. Yeah, it should be called mispronunciation of the day, not word of the day. I'm not making it up. It looked like Umbrag. It really looked like, and I know people in the chat also thought Umbrag. You guys don't want to admit it, but it looked like Umbrag. So all right, that's it for me. Thank you, everybody, for being here. We'll be back at 3:45 to see how this market closes. Again, if you did not check out the Robin interview, you can check it out in the chat. The link is there. Overall, thought it was a good interview. For those that want to know a little bit more about Robinhood, I thought it was pretty eye-opening in terms of some of the stuff that Vlad talked about. And thank you again for everyone for the love on the interview. It was a really cool thing. My mom was, really, really excited about it. And overall, I think it was a fun moment for the channel. And now we'll just keep growing from there and keep doing what we have to do. All right. Thank you, everybody. Appreciate it. I'll see you guys at 3:45 p.m. for the market close. Have a great, great Thursday. We got Friday tomorrow, almost the end of the week. And because of the market open, because of you guys, this caramel latte is now infused with water because I did not finish drinking it because of the market open. That's how much I love you guys. Thank you, everybody. Love you all. Appreciate it. See you guys at 3:45. Bye, everyone.